Now they say numbers don't lie, but they sure can be deceptive. I can tell you from my own personal experience and fellow other realtors I've talked to, the market is much worse than the numbers actually reflect. And the 30-second sound bites that you hear in the news about median home prices. So today, we're going to break down the market with my normal analytics and then decipher what's really going on in the housing market and how to best take advantage of this current trend. So stay tuned as we break this all down for you. Let's have a property tour, shall we? And stock market just crashed. Deuces. Okay, first up, let's check out last month's sales. As you can already guess, I don't exactly have great news here. Last month, we only managed to sell 1,475 homes. I realize that means nothing, so allow me to add some context here. While this was a 5% decline from the previous month in August, that tends to be normal this time of year. But there's two parts here to address. First, sales last year in September were abysmal to begin with. So coming in 5% below what was already a bad year is especially disturbing. How disturbing? Since I started tracking the monthly sales 12 years ago, last month was the worst September on record. The worst. Second worst? September of 2023. Third worst? September of 2022. Even taking into account the three worst Septembers on record, the 12-year average for sales in September is just under 2,500. So from a macro perspective, sales last month were off 39% from the norm. So with sales performing so poorly, this clearly means the median price went down again, right? August was the first month of the year that the median price went down for us. Not only did it go down, but it went down $10,000. So how did we fare this month? On the screen now, you can see that somehow we managed to recover $3,000 back with a median price of $478,000. And while the second half of this year has performed quite poorly, somehow the median price is still up 7% over last year. Now, from an economic standpoint, this makes little to no sense. But this leads us to the other side of the coin, supply, or in this particular case, inventory. As you can see now, we ended September with just under 5,400 homes. This was an 8% inventory increase over August. Now, more polarizing is the fact that this marked 21 straight weeks of increasing inventory and about 2,000 additional homes. Now, as a quick spoiler alert, I just pulled the inventory for this week and we finally decreased for the first time. So potentially, we might finally see a plateau occur this month. But let's get back out for a moment. Typically, a neutral market consists of a 6-month supply of homes. Earlier, we established that a normal month for sales is about 2,500. So this puts us at only a 2-month supply. Even with our dismal sales of 1,500, this barely gives us more than a 3-month supply. So again, sales are terrible, and we still only have a 3-month supply of inventory. This is the singular reason our market hasn't crashed or even seen a major correction. Supply and demand. People need to live somewhere, and we simply don't have the housing supply that we should. Even with all the federal lobbying from our state to open up more land from BLM to develop, these homes wouldn't come online for years to come. So for the immediate future, I wouldn't bank on enough inventory hitting our market to truly depress values. Especially with rates beginning to come down, that makes housing more affordable and thus more desirable, which ultimately translates into higher demand. Now, last but not least, we have my favorite metric, housing absorption by price range. This allows us to look at various price ranges to see how competitively they're each performing. Now, the buyer of $1 million home is likely to have a very much different home buying or selling experience than, say, an entry-level home buyer or seller. Now, Somehow I managed to omit this from last month's video, so I apologize, but let's check out what transpired these past couple of months. First up is the bulk of our market. Homes priced between $250,000 to $500,000. 2 months ago, this number was 41%. It dropped to 36% last month and now sits at 34%, meaning only 1/3 of homes that you see online are actually under contract. Even in May, this number was 53%. Just a couple years ago, this number was as high as 77%. Next, let's check out homes priced between $500,000 and $750,000. This dropped from 33% 2 months ago to only 26%. Next, we have homes priced between $750,000 to $1 million. This too dropped from 26% down to 24%. Now, finally, let's talk luxury. Homes priced between $1 million to $1.5 million. This saw a larger drop from 22% down to 18%. Finally, we have the ultra-luxury market of homes priced over $1.5 million. This dropped from 14% down to 11%. Now, just 2 years ago, the ultra-luxury market was at 34%. Put simpler, the ultra-luxury market is down 68% from its peak. Now, there's 2 takeaways from this metric. First, the overall market is down to 28%, so only about a quarter of homes you see for sale are actually under contract right now. Second, we have almost exactly the same amount of homes under contract today as we had the same time last month. So it's fair to conjecture that next month's sales will likely mimic this month's sales. Okay, now let's make some sense out of all of this madness. Sales are still terrible, the median price recovered a bit and put us up 7% from last year. Inventory has risen, but still is quite paltry. And it appears that sales will look the same this month as last month. So what should you do? Now, if you're looking to sell, I don't have much good news for you. We're heading into the normal slow season, with rates coming down, but not there yet, and the upcoming election around the corner. It pretty much is the worst time to be listing a property. So unless your home is truly in the top 5 to 10% of homes in that price range, everything is boiling down to pricing. Get it right and get it quick. Now, as a buyer, it's time to start salivating. In order to sell right now, sellers are paying the buyer broker commission without much resistance. Rates are likely to break through the 6% in the next couple of months, and I'm seeing more and more of these price reductions on the market, and most sellers are still being very stubborn, but in the forthcoming months, you're going to see deals pop up as sellers who need or want to sell will have to take much lower offers to move their properties. So if you're thinking about buying, I'd be jumping in right now to start researching and comparing. Then I'd try to write offers in November and December while most other buyers are consumed with the stress of the holiday season and sellers start getting a little bit more desperate. Well, that's it for this month. Stay tuned for more luxury property tours, and I'll see you guys all next month with a November update video. But till then, deuces.